Hey, thanks for tuning in. This is a weekend review for the week ending November 4th, 2022. Looking at a chart of the S&P 500. This is a weekly chart. We're going to try to make this video a lot faster than the previous videos. We'll see how it goes. So we have a rejection at the 20 again. Broke the previous week's low, 373.11, hit that 368, closed inside. Closed right at the 5 and the 10. They're both sloping down. Zoom into the daily, and this is where it gets interesting. So this type of trend line never lasts. It's too steep. All right, you want like a 45-degree angle. It's a much more stable trend. That being said, let's get it out of here. Here you see an obvious rejection at the 40, at the 50, at the 80, and that trend. You've got this inverse head and shoulders pattern. Left shoulder, head, right shoulder, breakout, back test. You've got defending the 20 on volume, histogram still positive, ADX not really above 30 yet, but is enough to say that, we don't have a trend. That's what ADX is saying. So that being said, we've got a range-bound environment, some key levels here to play with as the week comes forward. You really want to see price remain above 362, above 376, close the week right at 376. QQQ, the weakest of the sectors, histogram negative, PPO below zero, ADX confirming trend mode lower, price below all moving averages. This is not a bullish chart. This is a bearish chart. This is not a good look at all. What I will say is there's a left open gap here at around 259.90. That was filled. They closed above it, then defended it. This is an outside bullish reversal candle. All right. And really the pattern that I see is something like this setting up. You look at the weekly, this is not good. Closed above the 200 for 2 weeks, closed above the 5 for 2 weeks, now back below. Not what you want to see. The bullish divergence is still intact. The TD 913.9 buy setup on the weekly is still intact. That has not changed. But if you count the bars 1, 2, 3, 4, this close here is 269.10. This close here is 264. So they've started another TD9 sell. And again, this is a very ugly chart. Not what you want to see. It's possible that they're putting in a higher low. Possible they're just filling this gap, putting in a higher low, and will now travel to tag this trend line. But it's obvious that this ETF is lagging and should be avoided. SMH, a much better, much healthier look, has held the 200 and the 5 for 2 weeks, put in an outside doji. It did close green on the week. There is no divergence. Again, divergences don't matter. They're only in your head. There's no back-tested data to prove they matter. Sorry. If you can find that data, post it. I'll share it. Everything I've read, they don't matter. That being the case, descending channel, still in the channel, still headed lower. You look at the daily, could be a higher low setting up here. All right, still held the 20, 510, still kind of where they need to be, but they did cross bear, looking to cross bull again. Very clear line in the sand for both bulls and bears, left shoulder, head, right shoulder. I don't see why that can't be an inverse head and shoulders. Again, this has been outperforming QQQ, but underperforming IWM. You look at this PPO here, this is a nice angle of attack. See this, too vertical, right? If you just copy and paste here, we don't have that. We've already broken that trend, right? What we have is a more stable 45-degree angle. So again, that's kind of the angle that you want to see, but ADX is not confirming trend. There is no trend here. So what needs to happen is bulls are either going to get rejected here at the 195 level and head lower and print new lows, look to fill this gap down here at 172, this gap even right here at 177. But again, they already had that chance and they reversed. They held the 20 and now they're back above the 5 and the 10. Taking a look at IWM is still the strongest, still above this steep trend line. Yeah, technically this bear flag is still in play. PPO and histogram above 0. ADX not confirming trend. ADX is basically saying we haven't had a trend in IWM going back to like September, but really going back to like August. And that last trend was up. Since then, it's been a bunch of chop on lesser and lesser participation, and the breadth has improved. And if you look at this, I don't want to sell the 200 anymore. And the 50, they closed below and now is back above. So this is telling me everything I need to know. IWM continues to be the place to be in equities. There is a divergence here in price and momentum. And ADX is confirming on the weekly, no trend. And again, this last rally that she had here going higher, ADX went lower the whole time, no trend. This moved lower in price, ADX went higher. And now we've rallied again and back at 0. So the 200 here, and again, this is a textbook double bottom, textbook look below and fail. So they came in, they printed below and immediately ran up and recaptured the 200. That's bullish, it's not bearish. Closed the week right at the 200 and the 20. This will be the line in the sand. 171, again, as long as above 171, bull flag, bull wedge, whatever you want to call it. But as long as below 185, you have a bear flag, bear wedge. So those are the levels where you're going to see the bulls and bears fight it out. 185, 171. Treat it like a range. There's no trend. What I will say, though, is this PPO is crossing on the weekly, and that is what the bulls want to see. Take a look at the transports. Again, this is outside weekly reversal at the 200. Price came from 195 all the way to 214 and could not get above. Not exactly the look you want to see. Still continues to be very, very weak. If you remove all of these, you'll see this was the clue that the markets had topped back in November. It did not print a new high with the rest of the markets relative to the May 2021 high. That non-confirmation has led to this pullback and really was a predictor of things to come for things like Microsoft, who continued to print new highs. And really, if you go back and look at IYT, you'll see that IYT's high ended here in May. And we'll go back to Microsoft, right? Here's the May price, March, April, May, right here. So this entire move was not being confirmed by the transports. This uptrend has died. And you have a clear rejection here and then lower prices. So we can get rid of that. And you can see that higher prices on lower momentum is a bearish divergence. It is confirmed. Price is now back to the 200 on the weekly. If you go back a long time, this is really the first time she's touched the 200 on the weekly in basically a decade, in exactly 1 decade. So again, this is the time to evaluate big names like this, but also realize that if price gets below the 40, the 50 on the monthly, if these things do not hold, that this could unfold into something more like this. And again, that's not the time you really want to be in these names. Right? It's just pain for a long time. How long? 8 years. So it's definitely, this is not the place I'm looking to put my money. Google's looking closed below the 200. ADX is confirming trend mode lower, and there is a destination here. You just got to figure out where it is. It was not this low, this pivot high, even though this should find demand. Could be this pivot low, could be that pivot high, could be the pre-COVID pivot high. It doesn't really matter. They're all subjective guesses. What we do have is momentum trending lower, trend mode down, and a loss of a very, very important key moving average. If she can recapture 93 to close the week, you've got yourself a nice little setup. But again, all of these names are avoid. Meta, another one, avoid, not touch, do not engage. The names that I like coming into this week, gold, Is this a look below and fail? Captured the 5 and the 10. Do they hold this week? Very important to tell. This could certainly be an ABC flat, could certainly be a cup and handle, right? We've been looking for this ABC structure to form the handle. You know, I'm not saying it's time to own gold. Gold could come down to here. But what I will say is this structure, this look below a P pivot, fail, close 1 or 2 candles, and then recapture is how you trap. That is how the traps get laid. And so you've got a trap on the gold, in the gold sector. Let's take a look at silver. Similar looking structure. This is a zigzag though, not a flat. And the symmetry looks awesome. PPO reset to 0, went negative, and is now curling up. Histogram's curling up. You know, I think it's a little bit cleaner. The gold chart's a little bit cleaner. So I would play gold here. I would not be playing silver. Taking a look at the XLE sector, you got a doji on the monthly. On the weekly, this to me is a nice double top. And if they break through, they're going to 103. Again, not the place I'd like to put my money, because to me this move has already happened. You're already up 300% in 3 years for an ETF. That's a huge amount. Let's see, SPY's not up 300%. The entire bull run was 300%, not even 300%. Okay, not even. So people want to tell you, yeah, if you go start to finish over 12 years, you get 600%. But if you go back 2 years on SPY, you have a 78% appreciation. If you take a look at IWM and you go back 300% in 13 years. So yeah, good. I'm good. You can have your energy stocks. I'm done. And a lot of the news here is that China is reopening. So again, another low. I'm not willing to touch this sector. It's an avoid for me. The names that I like the most are NVDA. This is an obvious date with 150 on the monthly gap. Again, holding the 50 in a clear uptrend. The weekly has a TD9 DeMark 913.9. You now have a look below and fail on the 200, a recapture of the 200, and a 510 bull cross. I think 150 is a very, very conservative target. Could be going way higher, all the way back to 190s. But a big name that I own right now and have owned for the last month. Crocs is another name. In my book, this is a textbook bull flag. If you don't like that, you can call it an ABC. Either way, you're looking at a bull flag structure that is breaking out and closed above the monthly 50 for the first time since January 2022. So again, this is a very, very big deal. Yes, it could be a trap. Yes, it could be a broadening formation and the move is basically over. We'll have to see, but momentum is above the 0 line. PPO is above 0. Histogram's above 0. Daily chart does have the inverse head and shoulders look, and we're looking to see if this continues. You do have everything you need here to confirm this breakout, and the target for this breakout, again, is taken just like that, possibly 152. So these are the names that I'm looking at. And I hope you have a good weekend, and I tried to make this video very quick. If you like it, hit the like button, subscribe to the channel, and we'll see you next week.